Hi all, this is Ashish Kyal here, and let me talk about what has happened in the last week of the market. And by the way, this is a learning series from wavestrategy.com. What we are seeing right now is that in the last week, Nifty on Friday showed some attempt on the upside, but it touched 15,900 and reversed exactly from there. Now that is the level where we have seen very high open interest built up also. So 16,000 is the level where very high call open interest is there, followed by 15,900. And that's why we are seeing resistance being taken by Nifty on the last day of the week. Also, if you check, it formed a doji candle. Now, doji indicates indecisiveness. It indicates that market did not go up or down anywhere during the day. Prices closed where it opened. So it's an there was a tug of war between bulls and bears, and no one won. That is what doji indicates. Very peculiar behavior. If you check Friday morning in the first hour candle, there was an attempt on the upside, but with a long shadow. Then in the second hour, there was a sharp attempt on the downside, again with a long shadow, and price came back up. So that clearly indicated that Friday is going to be a sideways range, which we clearly saw. On the if you look at the overall advanced decline on Friday, there were more declining stocks than the advancing stocks, and because of that, their stock specific action was also very tricky. There were nearly 1711 declines on BSE compared to only 1541 advancing, despite of Nifty managing to close above that 15,850 mark. It's still the overall outlook from the mid cap and the small cap was not very bullish, because the mid cap index closed negative. If you look at the mid cap 50, that closed negative. Even for minor negative, it was negative, and small cap index also closed negative on NSE. Now that indicates some profit booking is happening across the high beta stocks, and we expect markets to continue to move within the range even now, because there is no trend which is emerging. And during a sideways market, if, as I've been telling you about, Bollinger Bands continue to work well. This is what I said in the previous day also. So what should be the strategy that you can adopt today? Possibly in today's market, wait for the opening candle. See what is the opening candle doing and how it's going to behave. The first hourly candle is going to be important. If we see a bearish candle being formed on the downside with no buying emerging, then that will indicate the day can go in sideways. Throughout the day, you might look for buying on the dips as such, because the daily bias has been positive. The way we decide the bias is on the basis of close. If it is happening above the previous day high, which means the overall bias is positive, unless we see a close below the previous day low. Now, since the bias is positive, it's better to prefer buy in this market. Buy on dips will be ideal, as we are stuck in a range. We need a clear breakout above 15,920 or below that 15,620 in order to start a trending move. So we need a close, I would say, above 15,920, 930 levels, because from there we reversed back in the last week also. So very important day today. If we are stuck in a range, nothing changes. Let's see if there is an attempt to at least break out either on the upside or break down on the downside. Thank you. This is Ashish Kal signing off. For more details, please visit wavestrategy.com, and you can get more information about various research and training we are conducting. Thanks a lot.